Thank you. All right, our next speaker is Mr. Wayne Heili, who is the Managing Director and Chief Executive Officer of Peninsula Energy, who is one of the very near projects that's coming back into the market. So the Lance Projects is an ISR operation in Wyoming, and they are in the final throes of completing their processing plant at the moment. And hopefully, Wayne, you've got an update for us that we're on track for back in production later this year. So over to Wayne.
Indeed. Thank you, Andrew, and thank you, Shaz, for hosting these uranium conferences. It's just, there we go, an absolute pleasure to be joining you today on this presentation. I'm at the site. I'm using a little bit of different system, but I think you'll find this presentation to be a bit of a treat. I'll go through it relatively quickly, but you know, it's a tremendous opportunity right now for Peninsula. I think your previous speakers have all highlighted the big question: who and what mines are going to supply a growing and constrained market for uranium? And you know, that's come from a lack of investment over the past decade. You know, along with now, you know, a lack of available talent. You know, it's placing huge pressure on this sector to answer the question: where's that uranium going to come from? You know, so I'd like to, you know, tell you the story behind Peninsula, who already has an established and really well qualified team. We have a project that was last in production just 5 years ago. We're bringing it back to production. So this is a restart of what we believe is a world-class uranium project in the state of Wyoming. You know, quite frankly, you know, for you investors, there's a lack of emerging near-term uranium opportunities on the ASX, and Peninsula, you'll see, provides a real clear competitive advantage. We have a strong cash balance. We're on track for the restart of production in late 2024 this year. Our cash flow should turn positive as a company by the third quarter of 2025. And, you know, once we have that big ambition of getting the project back up and running and generating sellable product, we have the opportunity to significantly grow the company through the exploration of our Barber and Dagger projects. So that's kind of the highlight reel of what we're going to talk about. Of course, I have the important disclaimers and disclosures. This presentation will be available to you, you know, on our website and through Shaw's. I'll be sharing it with Andrew, but here we are today. We're the next ASX listed company that's set to enter production. We have a world-class.
Interrupt you. We don't have the presentation up on our screen at the moment from you.
Boy, that's frustrating. I'm gonna restart the share and we'll get this. I'm most certain that that's gonna work for you. Hold on. Perfect. All right. Sorry for that. It's sometimes too many things to choose from. Look, we have the next ASX listed uranium company set to enter production. We're on track. And that's a happy news to share with you for the resumption of production here late in 2024. Our financial position, our balance sheet is strong, with the current cash balance expected to fund operations at Lance through to the sustainable free cash flow, which as I was just telling you earlier is expected to be around third quarter of 2025. We have favorable uranium market dynamics. I'm not going to spend my time on that. We have had plenty of speakers talk about the markets, and you know, we have a scalable asset set, multiple growth avenues and opportunities to expand our resource base here at our Lance-based Kendrick and Barber projects, and the Dagger project, which is just a stone's throw away from the Lance projects. Today, our market cap's 296 million Australian, trading around 9.5 cents per share. And at the end of the last quarter, we reported cash balance US almost $100 million. So that's the money that we're going to be utilizing to construct our project and get it back into production. The Lance projects are really one of the largest U.S. uranium resources. We have about 58 million pounds of JORC compliant resources on the projects altogether. Our production area, the Ross area, is the project area in red that you see. The Ross production area is fully licensed for uranium production. It's home of our project facilities and our central processing plant that we're building. There's about 6.5 million pounds of uranium remaining in the Ross project area to produce from, and that's where we'll be starting up production this year. We're expanding into the Kendrick development area. It has about 20 million pounds of uranium resources, JORC compliant. It sequentially will be the next area we produce out of. We expect to have full permitting for that in the very near future. So we're adding the Kendrick area into our Ross production area licenses, and that's all moving along very well. Then in the future, we have the Barber area. Altogether, the Lance projects are an area that's 8 kilometers wide by about 37 kilometers long. The Barber area holds about 32 million pounds of additional, predominantly inferred resources with a significant exploration upside. That upside really has been defined by our geologists as an exploration target between 100 and 163 million additional pounds. And that's based on past exploration results in the area and proposed exploration programs. Look, we have over 300 linear kilometers of redox fronts or uranium fronts mapped on our project area. And with additional closer space drilling, we think we could see that exploration target come to fruition in the future. We also have the Dagger project, which is northeast of our Lance projects area that you see on this map. Dagger holds about 7 million pounds of resources. It's about twice the grade of the Lance project, so it's a little better or more robust uranium project that we think we can add on as a satellite facility to the Lance production area in the near future. So combined, Peninsula has more like 65 million pounds of resource defined today, and we're excited about the future. But what we're really focused on and what the market should be focused on is our transition to operating as a low pH in situ recovery facility with an expanded central processing plant. When we produced in the past, up until the middle of 2019, we produced using a satellite facility that was built here. Ion exchange resins were shipped to a third party for toll processing, and we were not in full control of our destination, our destiny, our future, because we always relied on an industry peer for processing. Today, we're doubling our satellite plant ion exchange capacity so we can produce up to 2 million pounds per year. We're also adding elution precipitation and product drying circuits to our plant, our processing plant. And the core focus of the work at the site today is preparation of the plant and preparation of new well fields for production. This is a side-by-side picture of where we were at the plant construction in early July. On the left, we had cleared and leveled the space. We started putting together framing for pouring some concrete, and we poured a couple of small bits of concrete. Since July, you can see what we've done. We now have all the slabs and concrete foundations poured. We have tanks and pipe racks going into the plant facility. We have the red iron up for the building. We're putting the roofing sections on. We're starting to put the skin on the building, and all the work is moving to indoor work of plumbing and getting the tanks ready. Today, they were grouting in some of the tanks. Every day we have almost 200 people coming to our site working plant construction, well field development, construction, and operations. If this works for you, the next slide is going to provide you a video of the plant as it's currently is. And what you see first in the foreground is a couple of brine tanks. We use salt water as part of our elution systems. Behind it, you'll see some darker tanks. Those tanks are the eluent tanks where we prepare eluents for stripping uranium off of the resins. Further back and barely visible right now, but some lighter tan colored vessels. Those are the new ion exchange vessels that have been installed into the plant facility. Of course, you could see pipe racking going up. Right now, we're crossing through what is a maintenance corridor so that, that we'll have good maintenance access into the facilities. The two white tanks in the foreground here are caustic soda chemical tanks. The two taller tanks behind them in the darker colors are the precipitation tanks for precipitating uranium. And then the open space, the slabs on the very end of the plant are awaiting the installation of filter presses and product dryers. Both the filter presses and product dryers are set for delivery to the site in November. So we're continuing to focus on getting the new ion exchange, elution, and precipitation circuits up and running. We'll install the filter presses and dryers when they come in. And, this is really a look at the site as it was late last week with the drone flying by. We've had tremendously good weather for construction this year. There's been no delays in our construction. At the pace that things are moving, we do believe that we'll be ready for operations and kicking off production activities in December of this year. So there you go. Some of the latest updates on the plant construction. You can see how much progress we've made since July. In the previous picture, and what it looks like around here right now in the plant construction at present. Excuse me, I'm advancing the slide. But plant construction isn't the only thing we need to do to be successful. Our mine is a well field. We install and injection and production wells into an area, and we cover the uranium ore body, leaving it in place. What you see in the lower picture is the header house number 11 well field area. It's now fully installed. We have well covers over the wells. The lines are routed to the new header house, and the area is essentially ready to get started for preconditioning and mining. Inside the header house 11 building, we're effectively fully complete. They're still doing some automation work and fixing up a few of the controls, but the header house 11 now is effectively ready to start operations as well. So you could see, we're getting new mining areas ready to restart with the mine or start with the mine, and we're excited about the prospect of keeping this on track and ready for operations again by the end of this year. Our timeline has been this, and we were commencing the plant construction in May. May through December, we've been working on development drilling in Mine Unit 3, and now we have rigs shifted over to Mine Unit 4, delineating and developing the next mine unit 4, while we complete drilling in the header houses 12 and 13, which will be part of Mine Unit 3. We'll have the commencement of well field preconditioning actually happened in July, so we're checking that box. We have well fields operating and being we're lowering the pH and getting it ready for operation. So when we do start the plant operations at the end of this year, we expect to have uranium-rich solutions coming from the well field on day one. Again, the construction of the first new header house is scheduled to be complete here in the third quarter, and I believe that's going to be done before the end of this week, I'm told. Plant commissioning scheduled for the end of this year, starting up the low pH ISR and getting circuits moving and producing uranium. Our ambition is to be delivering first produced product to our customers in the end of 2020 or the second quarter of 2025. And again, to achieve a cash flow positive status in the third quarter of 2025. So everything seems to be on track. This is a market slide that we really don't need to talk about. I'm going to pretty much finish up here with a quick discussion about our uranium offtake contracts. As a company, we have been a past producer, a continuous supplier of uranium into the market since 2016 when the project first got up and running. We have some legacy contracts that we're still working to fulfill in the coming years, and we signed a new contract this year. So We have a very healthy contract portfolio. It shows us delivering about 460,000 pounds into contracts in calendar year 2025. We don't anticipate any sales this year, calendar year 2024. We have no obligations to sell uranium into our contracts this year. 2026, our contract portfolio moves up closer to 900,000 pounds for 2026, 27, and about 1 million pounds in 28. Then it starts to taper off as some of the earlier delivery contracts are concluded, and in 29 and 30 we drop back a little bit, and then there's opportunity for us to sell uranium in 29, 30, 31, 32, 33 in the new contracts. But the contract window for that not necessarily open at the moment. The utilities are still looking at contracts that start deliveries in 27, 28, 29 when you talk to them now. As a rule, 40% of our planned production over the next 10 years is going into contracts, and 60% is exposed to the market. Again, that's a significant percentage that gives us good leverage to the markets as well. Our offtake pricing, and Andrew, I know you talked about that with Triva. Really, our older contracts reflect a fixed base price, but it's a healthy base price that's going to be profitable for us in the mid-60s now. So a lot of our older contracts were base price escalated. Our newer contracts, like Triva talked about, really reflect the modern marketing philosophy of hybrids, where you have a proportion of your contract going to base prices and a proportion of your contracts going to market-linked pricing formulas. So even though 40% of our contracts are going in, or our production is going into contracts, probably only 30% of it or less is going into fixed price contracts. So we have very good exposure to the market prices and the upward movement. We believe in this. We think this gives us a lot of strength, this contract book, and motivates us into production. And we expect to be a long-term lasting producer. We're going to maintain a lot of flexibility to maximize the value of these assets through the sale of future production. We can expand our production profile after we get this up and running. We're looking at getting to a 2 million pound a year rate and maintaining that here, but expand it to perhaps 3 or 4 million through additional satellite facilities at Barber and Dagger. So, the future growth of this company and the opportunities for growth are tremendous. We have a great asset, district scale project that we control, and we're making tremendous progress on a daily basis right now to getting back into production and answering that question: who, with an established team, is going to be the next producer, and supplying into the market into the future, where there's such a projected shortcoming or shortfall of uranium production. So with that, I'll conclude the presentation. You might have a little bit of extra time. I went through that pretty quickly.
Indeed. Thank you, Wayne. Yeah, look, great. That's obviously a great overview, and looking forward to seeing you back in production this year. Can you talked about you're still on track for this year? Can you confirm everything's on budget as well? We're within the budgetary numbers.
It is. We're in a really good position. Now our contractor has delivered on timing. We've did a lot of advanced planning and equipment ordering. The equipment deliveries so far have all come in. That's why we have so much equipment placed on the pad as quickly as the pads and slabs were poured. We're absolutely in a good position. We haven't had any indications of unruly or inordinate cost overruns. So we still have a very healthy balance sheet that's going to allow us to accommodate modest cost overruns and keep this project moving. Should they come down the road. But to me, Andrew, every day is a good day when I come to the project and ask the question, where are we on timing? We're still on track. Where are we on budget? We're still on track. things are, it's great to come to the project every day and get news like that because, we've worked very hard to make good projections of our schedule and of our budget and to raise the capital that's required to put this project, not only complete the construction, but to put the project into production and get it to free cash flow positive. So, all good.
Yeah, good. And it was about now, wasn't it, Wayne, when the contract with the construction crew is going to shift to a fixed price contract? Has that process occurred?
Yeah, we're continuing to work with the contractor on the transition to fixed price. That's under negotiation. We may find ultimately that it's to our advantage to bear the risk ourselves, and we'll have a lower cost if we keep it on a time and materials. So, it's not mandatory that we switch to a fixed price, but that is something that we're continuing to negotiate with the contractor.
Okay, great. In terms of financing, the other thing that was going on in the background, with all that money being made available from the US government for uranium projects, clearly you're in a great position being a US domestic producer. And I think the DOE, you're applying for a loan there. Clearly, you don't need that money anymore to get this project built. But is that process still ongoing? And if the DOE did provide you with a loan, what would you use those funds for?
Well, the process, yes, it continues to be alive and well. Working with government agencies on debt funding can be a very long process, but we are continuing that dialogue. We have an opportunity to perhaps lock in a long-term loan from the U.S. government, and should we be able to do that, we can allocate some of our current funding towards the growth initiatives that we spoke about in the presentation, to expanding our resources through additional drilling in Barber, in Kendrick, and at our Dagger project, to add value to the company, to the shareholders through resource expansion, and then look at other project opportunities in the area. We have a lot of opportunities in front of us. Our focus right now is absolutely on getting into production, but we're really looking forward to the opportunity to grow this company and grow the resource base that we have organically through drilling and investment.
Great. Wade, look, thank you so much. Obviously, Peninsula is in a great position from Shore's perspective. Peninsula is one of the cheapest uranium exposures on the ASX. I'm still struggling to understand quite why it's trading as cheaply as it is when you're so close to first production. And I have no doubt there'll be a significant re-rate of the company next year as you start to produce your first pound. So congratulations getting this far. We look forward to following your progress in the next few weeks. Thank you, Wayne.
Thank you, Andrew.